That doesn't really work either.
Okay, we're going now. Okay, I think we are live. Let me just double check. Yes, all right, we are live. Get this going. Okay. Well, what is up, everybody? Thank you so much for joining and watching us live, and also those who are watching the recording. Thank you so much for being on here. I know that you being on this is definitely going to give you guys some help in your real estate endeavors at this time during this timing of the market and kind of how things are uncertain. So here's some disclaimers real quick before we go through. I remember that we are not a licensed attorneys, accountants, financial advisors, brokers, or any other licensed individuals. Even though, even if we have licenses, we're not working in that capacity at this moment. And the stuff that we go through is general in nature. And we also recommend that if you do need professionals and stuff to be able to make the decisions, to absolutely bring them on. Anything that can make a legal impact, especially financial decisions. And that also real estate investment results depend on a variety of factors, and they are unique. Each transaction is unique. And it doesn't guarantee results. Okay, guys, but yeah, we're here to share our experience, to share what we're seeing, to see what professionals are saying, see what we're doing today. So our topic today that we would like to talk about and share with you is this, and I feel like this is as timely as possible. So welcome, Steve. Welcome aboard. All right, so what we want to talk about today is real estate through the market, because things could change next week. It could change a month from now. It could be 3 months from now. We don't know, but we need to start planning and being with reality today. One thing is that there are two streams of thought right now. There are those that say, "Hey, everything is good. Nothing is wrong. Why are people what are people worried about?" Those people right now, if you're looking at the news and you're looking at exactly what we're going through right now, you're being a little. There's two extremes. That's one extreme. That's definitely being naive. That's not listening to the signs. That's not listening to experts, not listening to what's going on. There's also the other group that's saying, you know what, it is the apocalypse. It's going crazy. I need to stock up. I need to buckle down, and I need to shut out the world and not do anything. That's the other extreme. That is, to those people, they are missing out on so many opportunities, and they are. And so right now we're going to talk about keeping a level head, what you need to do, what things you need to be looking for, what things you need to plan for, and also some real estate strategies that you could do to be able to be successful today, right now. Is that right, Christion? Oh, Christion, you're
Oh yeah. So yeah, and the extremes are really more than that, right? I mean, I was on a call with Steve Myers yesterday, and like the extremes are completely on two sides of the scale. I'll keep this way out here. You've got people who are saying there's nothing to worry about whatsoever, and this isn't going to change anything, and it's going to blow over. This is something that can't blow over. I mean, with the type of losses that we've had in the stock market, with the shutdowns that we have, this isn't something that just blows over within a couple of weeks. The other side of that extreme is, like you said, it's actual. Some people are feeling like it's the apocalypse and they need to be in a bunker somewhere, preserving themselves while, the rest of the world burns. And I don't think we're at either of those extremes, but we do have to look at, what the possibilities are and how we're going to, take action and work during this crisis.
Yeah, right. So here's some realities right now, guys. So in terms of in your real estate, when it comes to real estate right now, lenders are freaked out. If you guys have seen, if you guys are if you pay attention to what's going on in the stock market, people have lost within a couple weeks, within March. And I was watching it like daily. People are lost 30% of their retirement income in a matter of weeks. That took years and years to build up. And so People are freaked out about what's going on with that. Banks have constricted their lending. Even lenders, like hard money lenders and stuff, they've gone down, and they're being a lot more cautious. They're not going to lend on deals that are kind of that are base hit. They want home runs, meaning like it's got to be a nice cushion. It's got to be a slam dunk deal in order for them to want to lend. Most lenders, or either that, or they want you to come up with more money so that so that it mitigates their risk.
Yeah, really, they're being more cautious, right, Tim? They're looking at things and they're saying, I don't know what the value is going to be 1 month down the road, 2 months, 3 months down the road, and so they're
Even
saying
weeks.
I'm going to lend less on that property.
Right. So they're protecting their investments as well. So they want to make sure that you have skin in the game, in case they have to take over the property from you because the property dropped like it did in 2008, that they are still secured. Okay. And also right now, I've heard a lot of people who are under contract, with deals. All of a sudden, their buyers backed out, and that's a lot. Now, don't be alarmed. We're going to talk about some other things on the other side in terms of what's going on in the real estate market right now. But right now, buyers are backing out. Sellers are holding off on selling. They're keeping their deals. If you talk to realtors, in fact, the one that's part of our instructor in our real estate group, Chris Wilson, a couple weeks ago, he talked about how he's got 50% less sellers listing their properties than they were before. And so there's going to be less houses on the market. In fact, there might be, yeah. And so, and also people are worried about homes possibly going stale on the market when people are, especially with this whole thing like in California and New York and other things where people are, when they're mandatory shut-ins, you can't leave your home except for the essentials. Some places have said that, you know what, showing homes for like realtors and stuff like that, that's non-essential. So it's kind of illegal at that time to go and show homes. And so yesterday I talked to a friend in Sacramento. He's got properties on the market, and he's worried because he can't bring anybody in, and he's already kind of on the cusp of having to pay extension fees to his lenders. So kind of like coming into his thing. And so he's worried about that. So understand that that's a reality that some people have to go through.
Kind of talk about the dichotomy of that, because we're not at that phase right now, at least not in any counties except Summit County here in Utah. And so we're not on a full on lockdown. And the fact that there's less traditional buyers on the market selling, because people don't want people walking through their house, obviously, at this time. So there's less people that are going to put their houses on the market or keep them on the market. What that does provide is an opportunity for us that have properties that are vacant because they've been remodeled, to where we might have the opportunity to capture some of those buyers that are still buying, because there are still people that need to buy. And so as of right now, and I'm talking like today, because this could easily change as we watch over the next week. You're going to give some examples of people who they had one buyer back out, but then the next they had another buyer come in and actually pay more. And so there are still buyers right now. And I think if you have properties that you can have on the market, while we're at today, 3/27/2020, you probably want to have those properties on the market and maybe be a little bit more aggressive with your pricing.
Yes, right, exactly. So just some other things too right now that we've seen last couple of weeks. So it looks like that, so the hospitality industry right now taking the beating. As we know, there's a lot of people who that I know who are doing Airbnb who have like zero bookings. Nobody wants to travel. They're worried about it as well as with the government mandates and things like that. So the rental industry, like RV rentals, hotels, they are taking a huge beating. And so for those people that are currently in that market, hang tight. It sounds like some of them are kind of changing strategies to more of a midterm type, where they changing it more to a mid to long-term rental, to kind of to weather the storm. Because average, you can get it for between 75 to 80% bookings at a good season. Even 50%, but 0%. Oh my gosh, I feel really bad, but I'm really glad for those that are dynamic and they go and they make changes as quickly as possible to kind of protect, so that because the way that some strategies of some of the people who do short-term rentals are, they don't own the rental. They rent it from the owner, and then they make their money on this side. But so they got to make sure that they make ends meet with their side, be able to weather the storm for a couple months so that they can take care of themselves.
And just a tip there real quick, because I know that we're probably not coming back to short-term rentals too much. I will say that I am in some of the groups of these people that have, mini units. And what I'm seeing is they're shifting the way that they run those. So there's a couple of things that they can check into. If you have Airbnbs, one of the things that they're doing is they're going off, what do they call it? Off-market bookings. So basically they're taking their properties off of Airbnb and those types of websites, and they're finding other bookings. Some of them even going back to past clientele, that if you've been running your Airbnb for a while and you have somebody that's come back to the same property multiple times and, might be looking to travel again, we have people that are getting, 30, 40, even 60-day rentals on short-term rentals, where they're giving them a break on the price, but because they're not paying the fees to, the booking agency, the Airbnbs, it's kind of making up the difference and evening that out. And then the other thing that Chris Wilson talked about when he was on the webinar is he actually talked about going out and finding insurance adjusters who move people that are, in a temporary situation into houses for a period of time. Those properties need to be furnished. So if you have an Airbnb, you might be able to go to those insurance companies and say, hey, do you have anybody that's needing, housing for a period of time? And, some people are making these connections that are going to last long beyond your, this crisis, because now they have added streams of revenue.
Yeah. Oh, and by the way, I looked on Facebook. It looks like Tim Jensen. How's it going, man, friend? Thanks for jumping on. He asked about a question about the bank, saying, hey, what about the stimulus package that gives banks more access to capital? So let me kind of clarify in terms of the banks of what I know. So banks are still lending. What I mean constricting is that there are some programs that the banks were, or that people were taking advantage of, that the banks had, that the banks kind of took away because of the uncertainty, like stated income loans. Now, there's not the same stated income like in 2008, what caused the crash in 2008. They're stated or very low doc loans. A lot of places are taking that away. They want to see full doc to make sure that they are making the right financial decisions, that you are really somebody who can go make these payments. So those types of programs we're seeing less of, or even taken away right now. So that hurts a lot of investors who don't have full-time jobs, where they have a bunch of rentals, but they look terrible on paper, but they're great. So it hurts them. And so that doesn't mean you can't buy them. It just means you need to be more strategic, come in with more, you need to come in with more, maybe a joint venture with a credit partner, somebody who has good credit, who can qualify for you, but you come in with the knowledge, you come in with being able to take care of, with managing the property and things like that. So that's a good question. And the stimulus, so that is going to help the banks at least make sure that they can because right now, yes. So anyways, I hope that answered that question, Tim.
And that's the thing, is we can't predict the future. So Tim, we'll get to this when we move further into the webinar. We're going to talk about getting access to cash. And this is one of the things that is kind of on a lot of people's mind is, how are the banks going to react to this? Because there's the possibility that they get they get flooded with a bunch of extra money that they've got to put out there into the market. That could mean that if you look good on paper, you can get access to those things. However, if they start constricting because of everything, and you haven't gotten access to the cash, from your credit lines, then you may lose the opportunity to take advantage of those. And of course, it could even put you in a bad spot if you can't continue to make those payments. So I'll share when we get, to that slide. I'll share a little bit about some of the conversations I've had there.
Yeah. So thank you, Crystal. Here's something I want to go to kind of put your guys' mind at ease. Yes, the market did, or the stock market lost a significant amount recently. It's kind of gone up a little bit the last 3 days. We're really fortunate. Today, it's actually down a little bit. Last time that I checked, and so people have kind of earned, so people lost money, but people kind of gained a little bit of money. But the pandemic is still not over, and so we're still. Tomorrow could be another day. We could lose 10% tomorrow. I've never, since I've been interested in seeing how the stock market works and stuff like that, and how the market works, I've never seen a time where it has been so up and so down so dramatically and so quickly. How does that affect real estate though? So because the stock market is not the real estate industry. They do not behave the same. And so I'm going to show you these things. So these are the last 5 recessions, including that big one in 2008. This is what happened in the real estate industry. If you take a look at this home price changes during the last 5 recessions. 1980, it actually went up 6.1%, 3.5% 1981. Now 1991, it went down 1.9%. But still, that might as well be like it didn't really affect it. And maybe that'll, and also 6% 2001. Now 2001, if you remember, that is when the two towers, that was the whole fiasco with the trade towers being hit, and that it caused a crash in the market. People lost a lot of money at that time, and so in 2008 it went down at least 20% on average. Some places felt it even deeper, some places not as much, but on average it was that percentage. Now, what is this market going to bring? And kind of give you my insight. Again, I'm not a financial professional, but I think about what is causing our current state right now. Is it more of a short-term temporary thing, kind of like what happened in 2001? Or is it something that was actually where the housing market actually caused the crash, like in 2008? So right now we understand what financial professionals and what also professionals are saying is that this our current instance is being driven by one factor, which is the pandemic, and a lot of people are getting hurt. They don't know how long it's going to last. People are being optimistic, saying it's going to be weeks to months. And some people maybe not so much saying, it could be a couple years before things kind of pick up. And so that's something to think about. But taking a look here, based on the key indicators, this is not really real estate driven. And so I feel like that we should be optimistic about what the upcoming months are going to bring. What about you, Christion?
Yeah, we got to be optimistic, but also, plan for the worst.
Yes, that's right. Hope for the best, plan for the worst. Yeah. So let me let's see here. So I've got a slide I was actually kind of working on over here. So here are some things we want you guys to be successful doing this market. Some things to do. So if you talk to people like very extremely successful real estate investors, as well as people who are investing in the market or investing in different businesses and things like that, like Warren Buffett, you need successful investors are constantly buying. They're buying on the ups, they're buying on the downs. Those who end up not being successful, they're trying to time the market. They're saying, it's not a good time to buy. It's not a good time to buy. We should wait. I bet it could go lower. I bet it could go lower. I think we can get more. Those types of people are not successful. Trigger shy, whatever. Just go in and do it. Do the numbers. Be cautious. Buy according to the numbers and buying with strategies that are going to help you and make money. And we're going to go over what some of those strategies are in a little bit. Another thing to be successful in today's market is to hold on to gain access to either you have cash, if not, create cash partners or people who either have cash or have access to cash. It's a really good time to raise those funds so that you can go and buy properties and make money. And the way to do that, if you understand the people that have money, like the lenders out there, they also have money because most of them like to diversify. They have money in the market, and they're scared. And so if they understand, so if you give them assurance and kind of let them know what it looks like to be a partner with you, or to lend your money to them, they realize, oh my gosh, like, I just lost 30% over here, but I see the strategy that my friend has on doing this property, and this looks pretty soft with a joint venture. I can make up about 10% of my money that way if I lend to him, or I can become a joint venture and make cash flow. This is actually a great win-win scenario. So great time to talk to people, because people are scared, and they're looking for help. So a lot of money are made at the downturns, guys. A lot of money are made. So do not give up. And again, there's a lot more to this successful slide, but I kind of ran out of time on that one.
Well, and I'll just add to those 2 points so we can kind of have this discussion, because you got to buy. You've got to always be buyers. That's who we are. And, it really comes down to solving problems. And so being able to buy is key, but your strategy has to change. You can't just have one exit strategy in this market. We don't know how long this is going to last. We don't know what the impact is. And so if you can get long-term seller financing, those are great deals to get into. If you can get long-term traditional financing, those are also great deals to get into. We're at a point right now where we just bought, like, while I was gone out of town, we bought a property and started the remodel. And one of the things that Steve talked to me about yesterday was, okay, do we want to rush? Do we want to try and get this thing done in 2 weeks and have it on the market to potentially sit for who knows how long? Or do we want to, take our time with it, because we do have time built into the deal. And so, that's kind of the debate is, we're kind of going to go in the middle on that as well. We're not going to purposely slow the project down, but we're also not going to pay too much to try to get somebody in there, faster, who might charge us more, who might not do the job properly. And, basically we don't want to act out of panic to try and get it on the market quickly, because we don't know what the market's going to do right now. And it's changing daily. And so in the same note, I'm looking at a lot of, the ways that I can be a buyer in this market. And one of the best ways is to talk to distressed sellers. There's people right now that they know they're going to ultimately lose the house anyways, even if foreclosures are postponed for the current time frame. That's not going to last very long. And for some of them, they're saying, I just want to be done with this burden now. I was on with Mike Kessler last night as he was talking about some of the deals that he just got under contract. I mean, literally, yesterday, the day before. And these are people that are saying, hey, even with this on freeze, I'm still dealing with the same situation. I don't live in the house. I don't need the house. I don't want to deal with that stress, in addition to all the other, stress that's going to come with this pandemic. And so one of the things that you can do is find ways that you can contact distressed sellers without having to be out there in the market. People are going to be less receptive to somebody knocking on their door. But you can leave sticky notes. You can, go put roadside signs out. You can contact people via phone. You can, reach out via social media. There's a lot of things that you can do, even if we went on a full-on lockdown, across the state or across the country. There's still ways of finding those people through, public records, because most of those public records are online, and contacting those people, from the comfort of your own home.
Skip tracing. Yeah, definitely.
Exactly.
Things like that. Lists you can get hold of.
Oh, sorry. Go ahead, Tim.
No, it's like lists that you can get a hold of that on a particular criteria of who you're looking, like your buyers are looking for. I think I've got somebody who's watching here now, Tim Jensen. He's doing that right now. He joined our team even a couple months ago, he's going out there and finding deals, but he's actually not being at the property. He's just going through those lists. He's just going through the list and giving them a call, because so you can be successful even when you have to stay home.
Yeah. And when it comes to getting access to cash, I mean, that's one thing right now is do it in the most strategic way possible, I guess is all I can say to that. I know that there's some people that I know, like I said, that are very successful. They have access to money, but they have these big home equity line of credits, right? We have a lot of those people on this line, most likely, or watching the recording of this video, that they are doing like a velocity banking strategy, or they're doing some of those things, and they're using that to pay down that debt quickly. Well, banks can make rash decisions. And when we saw what happened in 2008, I mean, I went through it. Banks made some rash decisions, and there were some people that were highly qualified, that had access to resources, that had assets, and the banks still shut down their HELOCs. And so when you have that money and it's not going to affect your credit, there's sometimes it's worth paying the little bit of interest that you're going to pay, slowing that pay down strategy that you've been working on, in order to just make sure that your house is secure, so to speak, right? And just firming up the foundation, if you will. Because once we do figure out what's going to happen, if you have access to cash, you can always pay down those lines again, or you can always, use that cash in different ways to help it earn money. So HELOCs is one thing, but the other thing is, what's going to get hit first is the unsecured lines. And so this was a conversation I was having with somebody last night, and he has tremendous reserves. He has, not retirement. Well, he does have he has retirement accounts for him and his wife and his kids. He has life insurance policies that he has hundreds of thousands of dollars in, and he's been working to build his credit to where he can get these big business lines of credit. So he's been actually instructed to shut down some of his personal lines, and to not make big purchases on some of his personal lines, so that he can use his personal credit to go out there and get business credit. And now he's trying to make that decision of, okay, is this the best time for me to be doing this? He's spent a year so far on making himself look as best as possible to the banks, so that he can, and I know Tim is going through a similar program, so he'll probably be able to speak to this, but the guy that I was talking to last night, he's basically kind of trying to make that decision right now of, okay, I could probably get access to, a few $100,000 on my personal lines right now. And, quite frankly, having access to that cash would make him feel better, because he has a lot of rentals. And those rentals are paying him, but we don't know what's going to happen come the first of the month, because unfortunately, with what's going on in the media and the way people are getting information, some people are taking, these relief efforts as permission to not make their payments. And if you have your renters not make your payments, that doesn't mean that you don't have to make your payments on your rentals, right? And so that's his concern, is he's got a really big nut to crack. And if renters stop paying payments, then that's going to leave him on the hook to do so. And so it's a debate. He still hasn't decided what he's going to do, because he really wants to continue down this path. And here's the thing, something to think about. If banks get a big stimulus package and they have access to that extra funds that they need to put into the marketplace, because they're kind of, instructed to do so, those people who still look really good to the banks and have the reserves and can make it through this and have been able to do so, probably are going to be the first ones to get access to that capital and probably get access to more. However, if that doesn't happen, if the banks don't get the big stimulus and or they don't use it in the proper ways, or they give it to other people in other industries, and then they pull back, the first thing they're going to pull back on is the unsecured lines. And so literally you could see your access to capital, your access to those unsecured lines disappear. And we saw this in 2008. We saw literally banks pull back, and some of them pulled back in I don't know what if you want to call it, foolish ways, aggressive ways, to where they even put people over the limit when they restricted their lines. And so if those people then couldn't repay or pay that off very quickly, then that started hitting their credit, and their credit started, being damaged. And so
Right,
you
like people had HELOCs out, like had 200,000 limit, and then the bank said, "Oh, now you're at $100,000 limit, but you had a balance of like 180, and now you're negative. Now you're over your limit, $80,000. There's no freaking way you could pay that back, right?"
yeah.
The people that got hurt, or a lot of people like that got hurt. Yeah.
Right. And I mean, that's a little bit extreme, but even if it's to the point where you have a $20,000 line, and you have, $5,000, or you have $5,000 with $2,000 in pending charges, and they bring it down to $5,000, and those $2,000 in charges come in. If you're then not able to pay those $2,000, that $2,000 down, that shows up on your credit as an over limit. And that affects you, because once the rest of the banks see that, the rest of your lines see that, they're going to start restricting too. And this is a reality that could happen. This is something that we could face. And so you have to weigh out your personal situation right now of, how much do I have as far as reserves are concerned? How much do I, how can I weather this storm? And if you're set, if you're good, if you've got, months, or, I won't share who it is. Maybe he'll share it himself. I know somebody that has over a year of reserves right now. He's set for a year to where he knows if he doesn't make any money, then he's got a year of reserves. And that's somebody that can be a little bit more aggressive in the market, and maybe doesn't have to pull back on their lines, and maybe can continue to build themselves to a position where they look good at the banks. If you're in a position
talking about me, is that what you're saying?
I'm talking about you, Tim. Yep. So, Tim can share about that. But, if you're in a position where things are already tight, you might want to get access to as much capital as possible, cash capital as possible, and just put yourself in the position to weather as best you can. Let's call it that way.
Yeah, right. Yeah. So thank you, Christion. So let me kind of share a couple things on here. So first of all, so some of these things we already went through a couple things on this being successful. Be calm. Have a level head. Understand your current market. Understand what's going on. Understand your numbers when you're doing your deals. This is right now when, in terms of being cautious. Yes, use your hard money lenders, but maybe you should focus more on joint ventures. Meaning that your instead of making debt payments to the person who's lending you money, you become a partnership on this deal, equity partners, and you split it in certain ways that you feel like is fair for both people. It makes a win-win scenario for everybody. And you got to make sure that when you talk with your lenders, when you give them a phone call and ask, hey, this is what I'm planning on doing, that you tell them what your that it makes sense for them, because maybe the person who's lending you the money is actually they're making payments to, or sorry, yeah, they have maybe they're paying money to lend you money, from other places, and they're just trying to get that arbitrage of they pay 5% here, but they're getting 10 to 12% from you, and so they make the money in the middle. So perhaps they don't have that. So that's where you just got to make sure with them, because you need to buckle down. You need to understand, you need to make sure that you're going to make money, and you don't want to be stuck in a situation where you aren't able to make those payments, or like the property value dropped. In fact, those that I've seen, investors that have weathered the storm of 2008. We're talking about investors that do like 1,000 properties a month. And I was on a recent webinar call with something like this. They say that in their strategies, they always have that mentality of like weathering the storm, what they're going to do, and what they've done is when it comes to these with these crashes, they recover. They recover, and at least every time so far historically they have recovered. And so, how long do you need to weather the storm for? Weeks, months? Are you able to switch your strategy from being a fix and flip to now being a rental and still have it cash flow, or at least weather cash flow even a little bit, so that you can go and weather the storm until you can finally sell it, maybe 6 months from now to a year, 2 years, however long it takes. And so joint ventures are going to be the way that's going to help you be successful and to be cautious of what's going to happen in the future.
To add to that, it doesn't necessarily have to be specifically joint ventures. That's a great strategy, but definitely reaching out to the different partners that you can have. Everybody has access to different resources, right? Some people right now are flush with cash because they are pulling their HELOCs, because they are selling their stocks, because they, one of the reasons that the stock market crashed so hard, like if you understand that whole concept, is a whole bunch of people sold what they had so they could have access to their money and not feel as much of the loss. Well, that means they now have that money sitting, and those people want to put that money to work. You have those people that have pulled their HELOCs. They've literally, pulled out their HELOCs. They're paying interest on that money. They're not pulling it because they just want to sit on it. They're pulling it so that they can keep access to it. And therefore, if you can show them a good way that they can put that money to work to earn interest with that money, those people are going to use it. And, many of them anyways are going to use it. So you just have to provide opportunity. And that's really the biggest thing you can do in this current market, in this current crisis, if you'll call it, is provide opportunity. Act in a way, instead of out of fear, but out of love and out of problem solving. If you can solve people's problem right now, whether that problem is they're going to lose their house or whether that problem is they need to put their money to work, that's how you get paid.
Right. That's right. Yeah. And so some other things too. And I've kind of debated with this because I was thinking, hey, this is probably a good time. Should I go and get a new car for my wife? Because that was my goal after I kind of refinanced some things. I had some good money, and so let's get a new car, or a new van for my family, and some different things. And I'm kind of debating, but now I believe I'm going to be holding off. So when it comes to doodads, if you're going to be buying the razor, or if you're thinking about buying the razor, and maybe some of you who are watching this, whatever I say, I can't help you. But it is, don't buy the things that aren't going to make you money. Now, if for any reason, if there is something, if you are going to buy no matter what, I would encourage you to perhaps buy some exercise equipment. Pointing to Vaza Gym that's just down the road from us. But yeah, all the gyms are basically closed. Nobody can kind of come. And so what are you going to do? A lot of America is going to get fat. Well, this is a great time to work on your body too. And so if you're going to buy some doodads, why not buy some fitness equipment that's going to help you to get more fit, get stronger, lose some weight.
And to add to this slide, you might want to type this in, Tim, if it's not somewhere else. Now is the time to be really cognizant of your budget and put yourself on a budget if you haven't. I'm going on, a stricter budget that I've been on forever. Let's call it that way. During these times, to just make sure that we're being wise with our money. But the biggest thing that I heard to clarify this isn't just coming from me, like the stuff that I'm sharing. One of the biggest things that I've been doing is making sure that I'm listening to the people who are in the market that are successful and that have been successful and that have been through, downturns or understand what the downturns look like. And so, basically you want to, be really strict with your budget, but don't pull back on the things that are most important, like marketing. This is not a time to stop working. This is not a time to slow down your business. If anything, you've got to double down, triple down, 10 times your efforts, because it's going to take that in some cases to make the same results. And then if you do that now, the back end is where you're going to receive the biggest benefit.
And more millionaires are made at down markets than any other time in history. 2008, so many people when markets tanked, those people who were prepared, they became millionaires in just within a few months or even more. And so this is a great time to take advantage of that. So yes, this is not a time to stop. This is not a time again to time the market to say it's not a good time to get in, let's hold back. In fact, that was my mentality a couple of weeks ago. And after just plugging into the group, plugging into other real estate investors and stuff, I'm like, oh my gosh, that is such a terrible mindset. It's a great time just to go in there and double down the efforts. So guys, just go out there and do it now. We could try to go into specific real estate strategies, but again, we're being general here because maybe you're not a fix and flipper. Maybe you're not a buy and holder. Maybe you're something different. And so we're giving you strategies right now and giving you some advice on things that you could do right now in your business to structure and to change. Like I said, joint ventures, talk with your lenders, because no matter what your real estate strategy is, you need money, whether you have money or you can get money. There's a big focus on money because right now is a great time to go out there and buy those deals. And if you have that money, then you can go and get them. And so, yeah, continue your marketing and yeah, so do not be afraid of what the future brings. Because yes, if let's say you buy right now and then all of a sudden 2 weeks later, that property drops 20% in value, just like in 2008. What are you going to do? Well, you already know that your strategy is a long-term hold, and so you're fine. You're fine for the long term. Don't worry about it. And
you shouldn't be buying properties at retail, anyways. So
should not be buying properties at retail. So that's correct.
Yeah. So if you buy a property and then it loses value, you should have been buying it way below market, anyways.
Yeah. So here's an example. I've got a property right now in Utah and up in Ogden. We were anticipating a $260,000 to $265,000 resale value. Now, and at that price, we're going to make $30,000. But we are prepared to have to go down in price if necessary. So we are anticipating a $250,000 listing when we list it in 3 weeks, which is a terrible time to list. Right now with what's well, let me say it potentially could be a terrible time to list, especially if there's a whole pandemic and they actually, and if at that time everybody is ordered or mandated to stay home, then that means I get no listings or whatever. I've got hard money on the line. I've got private money on the line. And so, which this is where my communication is going to, with my lenders, is key to make them feel secure. They're bugged. They're wigged out. They need security. So be that person to give them the security. That's what I'm doing. And yeah, so I have that strategy in place. So here is, let me tell you kind of the current market conditions to give you guys some ease. This is okay, our current market. So Utah currently has, well, we're talking Utah. I'm sorry for those of you who are out of the state. You can take a look. You can ask local realtors. You can go and see kind of what it is. But in Utah, Utah currently has the housing shortage of 55,000 homes. There are a lot of buyers out there. They want homes, and also right now, even though, like I said at the beginning, up at the very top of this thing, even though buyers are backing out of deals and sellers are holding off on selling, that doesn't mean that there's buyers out there that want to buy properties, or that there aren't buyers out there that are holding off on buying. People are still receiving multiple offers on home. It's too bad for those people who backed out. Yes, they got scared. They were the people on that other side of the scale who are saying, you know what, it's apocalypse. It's not a good time to do this switch. But there are also other people saying, you know what, we're doing it. We're going forward. We're going to get a great time. I'm bored. I don't like where I live. I want to move. I want to move. I need to change the scenery. So here's a couple examples of people who have just recently, we're talking within this week, of people who have these homes on the market. So a friend of mine, Connor, he had a home that was actually listed at $5,000. And then last week, the buyers backed out. They were scared, worried about the market, gone, or maybe the bank, was kind of worried about lending to them, gone. And so he was worried that he'd have to go and list his property $10,000 less than what he had it listed for. And so he was kind of bummed out, but they listed it with the price, what they were asking. And then all of a sudden they got it under contract, and now they're $15,000 above asking. So actually in a better situation than they were before. My friend Brian has a property in West Jordan $16,000 over asking on that one as well. And also when it comes to wholesalers are booking 6 times more appointments than usual. At least the wholesaler that I know, the way that they kind of do their business, they're booking 6 times the appointments this week than they ever have in a month. And so, this is a great, people are, when it comes to like people reaching their goals, when it comes to people kind of waking up out of their routine, this is causing that. This is a great time to make money, guys. So go out there and follow the strategy. Dig into your classes that we have in there. Understand the strategy you're going to do. In fact, watch the classes, what you want to do, get to them, and then double down your efforts on going out and making money in that strategy. Because this isn't going to last forever. This may maybe last another couple of weeks. It might last a couple months. Get on it now.
And one thing about the current market too is everybody's innovating. They're forced to. It's a position where people who were not tech savvy are now having to figure out how to get together virtually and do webinars and do these different things. And so innovate with the market, right? The market is already innovating. And so one example I'll just throw out there is a company sent me an email, and they're out of New Jersey. And so the one out of New Jersey, obviously over there, they're a lot more shut down than we are here, right? So what they have is they have a company that goes out in their full gear and they're doing these 3D tours for people. So you can still sell a property even if we're on lockdown, if you have people that are willing to wear the right gear.
Are you talking about hazmat suits?
Well, I don't know exactly. They do have a link that shows you what gear that they wear, but basically it's approved through, the state for them to be able to go to these different places. And so what they're doing is they're setting up actual 3D tours, and you can click through. And it was interesting because I went on, I did kind of go look and see what they were doing. And they had a full store that they had done a 3D tour with. And you could actually click on every single item in the store and see the price and, see what it looks like. And so there's companies like that here. In fact, you might be the one who already knows somebody with access to that technology that decides to take advantage of, that opportunity. People are going to need innovative solutions, and you have the opportunity to be that innovator. Oh, Tim, you're probably going to show a 3D tour of right now, yeah?
I'm about to, as soon as I, let me see, sorry if you're looking at my stuff here. This company usually does.
So just know as he's getting through that and finding that 3D tour, oh, he's got it. Again, the whole world's in this together. So don't think that the world won't work with you in the same capacity that you have access to work.
Well, this is almost everything. Like I can almost like put an offer on a home because now I can see everything, like ups and downs and everything. Like I know what needs to happen. The only thing that's a little bit harder is maybe, like checking underneath the sink or, so that's why I just, in this scenario, if I didn't want to look at the property myself, I would just say, hey, you know what, like the way that these electricity works, I might need to budget an extra $5,000 for updating electrical. This is actually kind of weird. Yeah. So this is what we're talking about. This is awesome. I really love that these realtors and wholesalers are doing something. In fact, it's actually realtors that can do this because, showing people's homes, stuff like that. Based on your state, wholesalers might not be able to do something like this. Just wholesalers who are not licensed realtors. But this is really awesome. Super helpful, virtual. I love it. And here is kind of something we want to make sure that we give you guys your day. Something we wanted to also, or something I'd like to talk about is this. You guys think about what these two different companies are doing right now and how they are. There are the Costco's and the Carnival Cruise. Now, Costco, right now, let's start with Carnival Cruise. They kind of got hurt. Right now, their industry, it's terrible. Their stock is super low. They are not getting any bookings. They are basically like, they're in a very terrible situation. And they're basically like, this picture shows Carnival Cruise that they're sinking right now. A lot of people have lost their jobs. and they're basically like crying in a corner. It's terrible. Costco, on the other hand, they are doubling down their efforts. They are definitely they're being sold out. I swear, like every day for Costco is Black Friday, as well as other places. Like every day is Black Friday, and they're making so much money. Costco Costco record profits. They keep on running out. They go and they buy more and more things that they keep on running out of. And so for you in our market with real estate, are you going to be the ones that are going to say, you know what, boom, abandon ship, and let's get out of the market. Real estate's not for me. I'm just going to go and continue working my 9 to 5. Or are you going to be like Costco and say, you know what, this is the perfect time to double down efforts and potentially make a lot of money? Here's one thing. I was afraid. So I was telling everybody that I was going to, by the end of first quarter this year, that I was going to quit my full-time job of 6 years. I make decent money there. It's kind of okay, but I work long hours. Even though it's only 3 days a week, I work 12-hour days, and in their evenings or deep swings, I work from until 3:30 in the morning. And so when it comes to these like mornings, sometimes I have a hard time coming to even the 10 o'clock sessions because I'm so tired. And so I've already reached my goals. I talked to my wife, and in fact, my wife's a lot more ambitious than I am. She's like, why didn't you quit like 4 years ago? But I'm super cautious. I want to make sure my family's taken care of. I want to make sure that I have all my ducks in a row, because what if I don't make money? What if I lose? What if this and that and that? Well, I've already have most of my debt paid down, or at least the debt that I promised that I'd get rid of to myself. I got that paid down. And as well as I made a lot of money last year. Like I said, over $300,000 in net real estate profits. And this year, I have currently made through real estate, through fix and flip, as well as just refinancing homes, pulling out some equity. I've made over $100,000 that I've received cash in hand that's net. And so I have a good reserve. And so I was thinking, should I quit, or should I stay? Because who knows until like things kind of get, I guess you could say, time. Am I going to time my me letting myself go out of my job? Am I going to time it so that it's more convenient, or am I just going to go for it because I already promised myself, regardless what? Well, this week on Monday, I gave my 2-week notice to my job, telling them I'm gone. So by the end of next week, I am going to be doing my real estate and running my business, being an entrepreneur full time. And I was super worried, but now after I gave that to my manager, and I was also really worried to give it to him. I was supposed to give it, in my mind again, I was supposed to give it to them at the beginning of March, give them a 4-week notice, and so that I'm there by the end of the month. But I was super afraid. I waited 3 weeks to give it to him until last week, and I was like, okay. Once I gave it, I feel free. I can't wait. I really can't wait. This is going to be, I'm super excited to finally have all the time in the world to wake up early, to run my business, to do the goals that I've loved to do, to dedicate myself fully to you guys and your progress, and to partner with you guys on deals in the future. And so again, it's a great time to be in real estate. And as long as you are knowledgeable, you're doing things correctly, you're being cautious, you are raising the funds that you need to in a responsible way, you guys will have the recipes to success.
So just a perspective on that, Tim, if I can, I feel like that's a selfless move, because you just opened up that opportunity. When jobs are going out the door, when there's less jobs available, you're freeing up a job for somebody else that they can take, and you're going out there and building a business. So good on you for that.
That's fun. Yeah, I've kind of let some people know. It's like, hey, I'm leaving the position. There may be people who aren't interested in real estate. They aren't interested in what I do. I say, well, if you're looking for something, you want to use your Japanese, because I was in a Japanese speaking position. Yeah, this will be available. They're going to be looking for some more people. Yeah. Thanks for saying that. And here, sorry, last thing that we want to tell you guys is that right now, people, your community, your neighbors, the country is in a time of need. And so while you are experiencing these highs in real estate, making money, it's also a time, because you're doubling down your efforts in making money, it's also a really good time to give back and to double down your efforts at going out and helping. And so people need your help. People, your funds can be, your money can be used to do a lot of good. Your time, your efforts can be used to help a lot of people, guys. And so go out there and see what you can do to help raise your community in the process.
Yeah. So recap, final tips. First of all, just look at your current situation and make decisions based off that in as calm a fashion as you can. So don't panic. Panic is not going to be what helps you. Get access to capital, whether that's your own cash or that's going out and talking to people. I'm talking to, other people right now that have told me that they have cash that they want to put to work. And I'm just having those conversations. I want to feel out where they're at, because if they have that money, I want to be able to help them put it to work. Next thing is find ways to work regardless of whether you can leave your house, right? Find ways to continue to build your business regardless of the worst case scenario. And then last of all, that I want to throw out there is be careful where you're getting your information from. And if you're going to get your information from all the sources, all of the extremes, make sure you take in mind what the agenda is of the people who are giving that information out. Meaning you're going to get an overly optimistic view from people who have their money in the market and want it to be good. You're going to get an overly, what do you call it? Pessimistic view from the media that wants to sensationalize how bad things are, because that's what sells. That's what people are going to watch. Unfortunately, in this world, bad news sells. And so don't buy too much into the bad news, but look at the reality of what can happen. Don't buy too much into the good news and look at the reality of what could happen, right? And so with that, I think if you can look at the two perspectives, you can find that middle ground that meets where you're at, because you can lean more one way or the other based on how you're set up financially and how your own house looks.
Yes. And with that, please, I beg of you, limit your media, like your news and social media viewage, because that will, here's the thing, like I told you, that wholesaler, 6 times more, he had 6 times more bookings, and he's had even a lot more people going through his homes to buy his homes than usual, and things are going great in his business. But then all of a sudden he turns on the TV, doom and gloom, the world is ending. He's like, wait, what? So, and by the way, if there's anything that is impending that you need to know about, that news is going to get to you no matter if you want it or not. And so don't worry about having to pick up and to see what's going on in the news. You are going to know by your neighbors, by your family. Somebody is going to tell you. You are going to get caught up to date with that, the most important or the most dire things that's going to going on in the news. So, okay, guys.
And the other perspective of that I'll just throw out there, because I've actually been probably consuming way more over the last couple of days, especially. A lot of you know I've been in Hawaii for 2 weeks, so it was way different there. They didn't start shutting things down until I was basically leaving. But getting here to Utah, I've been consuming a lot of information, trying to really get a perspective and an understanding of what's going on, but I'm choosing where I'm getting that information from. I'm not just, getting the sensational headline of the horrible things. I'm taking the time to really grab the information that is specific and important to me, meaning coming from people that are in my market, that are in my industry, that are, working, and the things that relate to me. So I want to know what the stimulus package is all about. I want to know how I can take advantage of it as a small business owner, and if there's even, anything there. And so those are the things that I'm choosing to research, is the things that, matter to me. I'm not going to go, look at the whole worldwide perspective of the fear. because fear is not what's going to get us through this. Love and productivity is.
Okay, sorry about that. Okay, yeah. So with that, we'll leave you guys to the rest of your day. Go out there and be successful, and hopefully we give this will kind of give you some insight in terms of what you can do. Let us know how we can help you with your business, and we're here for you guys. Okay, take care, do good, be good.